Let's talk about the ultimate risk asset, and that is Bitcoin, of course. The red headline crossing the terminal right now that Bitcoin surging to its first record high since November 2021. It has been quite a journey to get us there, to say the least. And I mean, talk to me about that, because you think about the difference between November 2021, when Fed funds were at zero effectively, and where we are now, you know, well above 5%. What do you make of those types of moves in this market?
Well, obviously, risk is on. People want to be in risk assets, and so Bitcoin is the ultimate risk asset. I think the launch of the 11 Bitcoin spot ETFs has a lot to do with driving market demand. You know, if you look at the actual available liquidity in Bitcoin, like something like 85 to 90% of Bitcoin is not liquid. So that's that 10% that those spot ETFs are playing with, and the flows into those funds are tremendous. You know, I believe there's 4 that are over $1 billion, and the BlackRock one is at like 9. So, you know, if you think about it, the flows into these products are very strong. So I think those two things are part of the story. And then you have the halving that's coming up in April, which will also push the price up. So a lot of tailwinds for Bitcoin right now, not the least of which is that people are more likely to take a chance on risk assets.
All right, really appreciate that. And of course, you mentioned those spot Bitcoin ETFs. Those launched in mid-January, like you said, upwards of 10 or so that actually launched as new ETFs. As an investor, how do you do due diligence on those products, given that they all hold the same thing? What does that process look like from your shoes?
For me, I look at who the issuer is. So obviously the big winners, Fidelity and BlackRock, they have overall trust. They have a lot of experience just running ETFs. For me, I prefer Bitwise as BitB, because this is a firm that has been dedicated to the crypto space for years now. I first met Matt Hogan in 2017 when they were just getting up and running, and he has really been able to help with the advisor market. They're very good with education. They're very dedicated to the space. So I'm encouraged that people see that. For me, it's all about the issuer. I want to be with an issuer that knows what they're doing and that is dedicated to the space. So I tend to prefer something like BitB versus iBit or Fidelity's product, which have obviously been the two biggest winners because just the large scale of the firms behind them. But for me, the due diligence becomes about the issuer and not necessarily the underlying.